Hello friends, welcome back. In our previous video session, we started discussion on expansion through cooperation strategies, in which we have already discussed on strategic alliance and joint venture. In this video session, we will be discussing on expansion through cooperation strategies by means of mergers and acquisitions, which are the common ways of strategic approach for growth and expansion of sales and market share. So, merger strategies refers to the planned approaches that organizations takes when deciding to combine with another firm. The goal is to leverage synergies, gain the market share, enhance the competitive advantage or to enter in a new markets. Both the firm brings together their resources, products, etc. and here existence of both the combining firms remains intact. Let us understand the types of mergers along with suitable examples. The first is horizontal merger. This type of merger happens when two companies in the same industry and often at the same stage of production. The main goal of this type of merger is to increase the market share and to reduce competition. For example, in the Indian market, the merger of Airtel and Telenor, which happened in 2017 after the entry of Reliance Jio into Indian telecom sector. This is an example of horizontal merger. Airtel, a leading telecom provider, absorbed the operations of Telenor to strengthen its presence in India and reduce the competition. The second type of merger is the vertical merger. This involves combining companies that operate at different stage of production process or value chain but within the same industry. This can help to reduce the cost, streamline operations and increase control over the supply chain. So you can say this is the type of vertical forward or vertical backward integration. Here we can take example of merger between the Reliance Industries and Network 18 in 2014, which aimed to create synergy between the Media Group and Reliance Broadband Services. Next is conglomerate mergers. This type of merger involves firms from completely different industries. The motivation behind a conglomerate merger is often diversification of the business risk and entering into a new market. Here we can discuss the example of Larsen and Turbo and their acquisition of Mindtree in 2019. It is an example of conglomerate merger as L&T, an engineering and construction giant, entered the IT service sector through Mindtree. The another type is market extension merger. This occurs when two companies selling similar products but in different markets merge to expand their geographic reach. For example, HDFC Limited and HDFC Bank created a strong market presence through their merger plans. Though it is still pending due to regulatory approvals, the objective behind is to focus on expanding their footprints across various customer segments in the banking and financial service sector. And the last type of merger is the product extension merger. Here the merging firms that sell different but complementary products with the aim of offering a broader product range to their customer base. For example, the merger of Maruti Suzuki and Suzuki Motors allowed for greater integration of product lines combining Maruti's automobile manufacturing with Suzuki's technology and global presence. Let us discuss few examples of mergers, starting with Vodafone India and Idea Cellular, which is a type of horizontal merger. Vodafone India and Idea Cellular, two of the India's largest telecom service providers, merged in 2018 to form Vodafone Idea Limited. This was one of the largest mergers in India's telecom industry. The strategic objective was to combine resources and market share in the face of intense competition, especially from the entry of Reliance Jio, which disrupted the market with the aggressive pricing strategy. By merging, Vodafone and Idea could reduce operational cost, expand network coverages and improve services offerings to their customers. The second example we can take here is a Tata Steel and Bhushan Steel in 2018, the another example of horizontal merger. In 2018, Tata Steel acquired Bhushan Steel through the Insolvency and Bankruptcy Code (IBC) process. Tata Steel took over Bhushan Steel, which was undergoing financial distress, to gain a stronger foothold in the steel industry. Tata Steel strategically aimed to increase its steel production capacity, reduce its debt burden and consolidate its position as a leader in the Indian steel industry. The acquisition allowed Tata Steel to integrate Bhushan Steel's plant and operational resources, making it more competitive in the domestic and international markets. Another example of merger is between Wipro and Health Plan Services in 2017. Wipro, an IT services company, acquired Health Plan Services to expand its healthcare and insurance vertical in US market. Tech Mahindra and Satyam Computer Services, the merger happened in 2009, is an example of vertical or strategic merger. In 2009, Tech Mahindra part of Mahindra Group, acquired Satyam Computer Services after Satyam was embroiled in a major financial scandal. Tech Mahindra, which had been relatively smaller IT player, took over Satyam to expand its portfolio and capabilities. The acquisition was part of a strategy to expand Tech Mahindra's services, particularly in the IT services and business consulting sectors, and to gain global market share. Satyam had a strong client base and international presence, particularly in the United States, which Tech Mahindra wanting to capitalize on. We can even take the example of Tata Group and Jaguar Land Rover in 2008 as a conglomerate merger. Tata Motors, part of Tata Group, acquired Jaguar and Land Rover JLR in 2008, a move that helped to diversify Tata Motors business into luxury automobile market. The merger was a strategic move to move beyond Tata Motors' traditional portfolio of mass market vehicles and enter the high growth luxury vehicle segment. The acquisition also gave Tata access to advanced technologies and design expertise from JLR. Let us now understand why firms opt for the merger strategies. First is merger helps firms to achieve economies of scale. Merger can help firms to reduce cost of consolidating operations, purchasing power and production facilities, leading to economies of scale. For example, Reliance and Jio leveraged mergers or acquisitions to achieve a better cost efficiencies in telecom sector. Merger helps in improve market share and geographic expansion. Mergers allows companies to rapidly gain market share and enter into a new geographic markets. The Airtel Telenor merger allowed Airtel to expand its reach into rural India, reducing competition and increasing subscriber base. Merger also helps merging firms to access to new technologies and capabilities. Merging with a company that has unique technological or intellectual property can provide a competitive advantage. For example, take Mahindra's acquisition of Satyam provided an access to new capabilities in IT services industry. A company might pursue a merger to diversify its portfolio, reducing reliance on a single product or market. For instance, Tata Group's acquisition of Jaguar Land Rover allowed the group to diversify into luxury automobile manufacturing, reducing its dependency on steel and other traditional businesses. Merger also allows synergies and improved competitiveness for both the firms. Companies often merge to combine their strengths like complementary products, technologies, or market presence and create synergies which can improve competitiveness. Tata Steel Bhushan Steel merger was aimed to consolidating Tata Steel's position in the Indian steel market. Merging also provides financial benefits in terms of tax advantage. Companies can use merger to optimize their tax positions, reduce overall tax liabilities, or utilize unclaimed tax benefits from one of the companies in the merger. Some companies may also seek to merge to improve financial stability as seen in the several distressed assets mergers. Merger often help companies acquire human capital and strategic resources that may otherwise have struggled to access. This is seen in Wipro's acquisition of health plan services to enter the US healthcare IT space and gain expertise in that industry. Even when the mergers are providing more benefits to the companies who are coming together for collaboration, sometimes the merger also get failed. So let us understand what are the reasons for failure of mergers. The common reason for failure of merger could be the cultural clash. Merging companies often have different corporate cultures, management styles and organizational structures which can create friction, reduce morale and negatively impact the performance. For example, Daimler and Chrysler's merger failed in large part due to cultural differences between German and American operations. Merger also fails due to overestimation of synergies. Firms sometimes overestimate the benefits they will achieve from the merger, especially when the expected cost saving or market growth fails to materialize. AOL and Time Warner's merger in 2000 is a classic case where the anticipated synergies were not realized and the merger got failed. Another reason for failure of merger is incompatibility in operations. Merging companies with incompatible system, processes and technologies can face significant integration challenges. For instance, ICICI Bank's merger with Bank of Rajasthan saw challenges in merging the bank's IT system and cultures. Sometimes merger even fails due to regulatory hurdles. Regulatory scrutiny and antitrust laws can sometimes block mergers or impose conditions that make the merger less profitable or attractive. For instance, Google's attempt to acquire Fitbit was met with the significant scrutiny by antitrust regulators in US and Europe. Poor integration planning can also be a reason of failure of merger. Failure to properly plan for integration, including managing human resources, aligning technology, and harmonizing product lines, can lead to operational disruptions. The same case of Daimler Chrysler's merger failed partly due to lack of effective integration. Financial distress or management can also lead to failure of merger. Mergers can lead to financial difficulties, especially if the acquiring company takes on too much debt to finance the acquisition or mismanages the integration processes. An example is Satyam Computers before it was acquired by Tech Mahindra, where the merger failed due to financial scandals and poor management practices. Let us now understand what acquisition strategy is. Expansion through acquisition is a strategy in which a company grows by purchasing or merging with other companies rather than developing its business from within. This approach allows a company to quickly access to new markets, products, technology, customer base and resources. Acquisition can be domestic or international depending upon the company's goals and marketing strategy. Thus, the acquisition helps businesses to increase their market share, access to new customer bases, diversify their product offerings, improve efficiency, and can help them to gain the technological or intellectual property advantage. Let us now discuss few examples of acquisition, starting with Facebook's acquisition of WhatsApp in 2014. Both the companies belonging to the sector of technology and social media, and the deal value was $19 billion. Facebook acquired WhatsApp, a leading global messaging app, in one of the largest tech deals of its time. The acquisition allowed Facebook to further dominate the mobile communication space and expand its reach, especially in emerging markets like India. The second example we can discuss is of Tata Group's acquisition of Tetley in 2000, where both the companies are from the food and beverage sector, and the deal value was $450 million. Tata Group, through its subsidiary Tata Tea, acquired the British tea company Tetley. This move was part of Tata's broader strategy to expand its global footprint and gain a significant presence in the international tea market. Walmart's acquisition of Flipkart in 2018, which belongs to e-commerce or retail sector with a deal value of $16 billion. Walmart acquired a 77% stake in Indian e-commerce giant Flipkart. This acquisition marked Walmart's strong entry into Indian market, particularly in online retail space, as it sought to compete with Amazon in one of the world's largest and fastest growing e-commerce markets. Another example is Paytm's acquisition of Visa's stake in India in 2021, which are from fintech sector. Paytm, one of the India's leading digital payment companies, acquired Visa's stake in its joint venture with the Indian government, creating a more streamlined payment solution for consumers in India. Reliance Industries acquired of Hamleys in 2019 in the retail sector, and the deal value was $88 million. Reliance Industries, owned by Mukesh Ambani, acquired the British toy store chain Hamleys. This acquisition was part of Reliance's push to diversify into retail segments and strengthen its global retail presence, especially in the toy segment. I hope you understood what mergers and acquisition strategies are, and the purpose and advantages of mergers and acquisition, and the various reasons of failure of mergers. In the next video, we will be discussing about the takeover strategies. Stay connected and thank you.